Hi everyone, it's Grace. Welcome back to my channel. So in the previous videos, I have covered my experience in renting and why I became a realtor. To check out these videos, click here and don't forget to subscribe to my channel. And also click on the bell button so you'll get notified when new videos are uploaded. Okay, today I'm going to cover a very interesting topic. I'm sure a lot of you dream of having your own home. And you may be renting at this moment and not even knowing that you already have the ability to buy right now. So today I will cover the topic of renting versus buying during Covid Recession. As the title indicates that this video is for those of you who already have 50K. So if you don't have 50K, close this video. Well, you can still view because you'll know exactly what to do when you get to that point to have that dream home of yours. The first thing I want you to understand is that not every area is cheaper to buy than rent. It really depends on the market of the area and also the policies that affect the mortgage rate, the property taxes, insurance, and so on. So don't just go on the internet, see a beautiful property and say, I want to buy it. It doesn't work that way. Know the area well before you make a decision is crucial. Plus, I also use AVAX, a proprietary system owned by my broker Avanti Way Realty, to provide a buy versus rent calculation to show my clients which areas are cheaper to buy than rent and what they need to prepare before buying. Another rule of thumb when you consider renting versus buying is that condos are generally cheaper to rent and single-family homes are generally cheaper to buy. A condo is a condominium with multiple units in a building. Each condo unit can be separately owned but share common areas such as gym, pool, etc. A single-family home stands alone on its own land without sharing walls with other structures. So this general rule helps you screen your choices. Another important reason why condos are more expensive to buy than rent is because the HOA fee is generally higher. The construction, renovations, and maintenance of common areas such as gym and pool require higher costs to operate. Single-family homes, on the other hand, are cheaper to buy than rent because the HOA fees are generally lower. Each single-family home has its own lawn, pool, and other amenities, and you'll be paying for yourself, not other people's amenities. The second thing I want you to understand is that the COVID recession is a unique time for you to consider buying because the social and policy conditions benefit the buyers a lot. I share on my social media page everyday news and policies that affect the real estate market in South Florida. So be sure to follow me on Facebook and Instagram so you'll never miss out on any opportunity. The current 30-year fixed mortgage rate is 2.71%, which has hit a record low in history. Believe it or not, we're already in a recession due to COVID, and the mortgage rate is reduced to benefit people and increase consumption to boost the economy. Since this is a fixed mortgage rate, it means that when the economy is fully recovered and the mortgage rate is back up, you'll still be locked with a historically low mortgage rate. You'll be paying a mortgage significantly lower than those who purchase a home during an economic boom and save more in the long run while enjoying your dream home. The third thing you should know is the home value you're looking for and the amount of loans you can take out. If you put down 10%, you'll be able to get a beautiful 500K property. Remember, the median home price in Miami is $410K, a 10.2 increase from 2019. So a down payment of $50K will give you more than enough to get a beautiful property. And you'll also see an increase of your home value year over year. If your credit score allows, you'll also be able to get a 3% down. How good is that? The fourth thing you should know is the composition of the mortgage rate. The lender usually provides the borrower an APR, which stands for annual percentage rate. The mortgage rate does not equal APR, which includes the cost of obtaining a mortgage. Depending on your situation, the APR provided by a lender varies. APR usually includes mortgage interest rate, points, which are loan origination fees, and private mortgage insurance, which stands for PMI, and other costs. If you pay less than 20% down, the lender usually requires you to pay PMI, which is common among home buyers. To take full advantage of APR, you can even buy discount points which lower the interest rate for the loan. So you'll be able to get a lower interest over the life of the loan. So this is the basic structure of the mortgage rate that I want you to take away from this video. The last but most important thing that you need to know is that the mortgage interest is a major tax deduction item. This is not the mortgage payment, but the interest on the mortgage. When you file for your annual taxes, if you own a property and pay mortgage on it, you'll be able to claim the mortgage interest and reduce your taxable income. This is one of the reasons why many people choose to buy versus rent. So if you have saved up $50K and looking for something to buy, give me a call and we'll talk more.